Hi, this is Raman Gill. Welcome to episode 75 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. This episode, we'll take a look at how to use moving averages to get into trades. We will take a look at where to enter the trade, where to place our stop loss, and when is the perfect time to exit the trade according to moving averages. So let's go on to the charts now. Here we are looking at how to use moving averages to trade Forex. Moving averages can be a good tool to find a trend in the market. If you're not able to identify where the trend is, or if you are newer to trading, this could be a very helpful tool to understand how the price is trending and also to enter and exit trades. However, just like any indicator, this is a lagging indicator, so keep that in mind. However, so don't be completely dependent on that. Do pay attention to price action. However, this can provide you some extra help. So here I'm using 4 different moving averages. We have shorter term moving averages, which are 5 and 13 moving average. These are all EMAs, so exponential moving averages. And then I have 50 and 200 moving averages. So the 50 and the 200 are more of the longer term moving averages. If you are looking to trade for a shorter time frame, you can use the shorter moving averages here. And if you're looking to swing trade or stay in the trade for a longer period of time, you can use the bigger moving averages. The real difference here is that the smaller moving averages will cross over more often than the larger ones. However, on the flip side, if you're only using the larger moving averages, you may give part of your profits back because they won't cross over till the price is pulled back substantially. So just keep those things in mind. So I would say play with the shorter term as well as the longer term moving averages and see what suits your personality the best. So this is how we would use moving averages. The easiest way to use moving averages would be to look for a moving average crossover. So in this case, in any kind of a trending move, what we would like to see is the shortest moving average on the bottom. So if you're looking for a downtrend, and we want the largest one on top, so this is our 200, and then we have the 50, 13, and 5. So when they are stacked like that, that means the trend is to the downside, and you will also see this is pointing downwards, so this is sloping downwards. So when your shorter moving averages cross to the downside from above the longer term moving average, that gives you the indication that price is likely to move lower. So this would be a signal to enter the trade. So in this case, once we see that the price has crossed, all the moving averages have crossed to the downside, and we get a nice bearish engulfing candle here, we can look for a bit of a pullback, 50% pullback, and enter the trade short here. So the reason we are entering the trade short is because the moving averages have crossed to the downside, and our stop would go above the highs here, and we would stay in the trade till the moving averages cross back together. So this is a live example. In this case, this is a current price action, and at this point, as we can see, the moving averages are staying stacked. So we have 5 moving average, and then 13, 50, and 200. So as long as they stay lined up like this, that means that price will continue moving lower. Once the yellow moving average crosses over to the other side above the red, just like this one here, that means that the price is going to start moving up. And once all of them cross over in the opposite direction here, that means the move is done and we can exit the trade. So for a shorter term trade, you would just look for the crossover of the shorter EMAs here, so 5 and 13. So once the yellow crosses over the red, it will be time to exit the trade. If you want to stay in the trade for a longer time period, you would just look for a crossover of 50 here, or for even longer time frame, you would look for a crossover of 50 going above the 200 like this here. You will look for this type of a crossover. That would mean that trend has changed and it's time to exit the trade. Again, try trading both of these. See whether you prefer the shorter term or do you prefer the longer term moving average crossover. Give it a try and see how this plays out for you in this trade here. In the current price here, we have 81 pips in the trade, which is about $800 if you're trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. As always, it's a pleasure sharing these trade setups with you. If you like this episode, please like, comment, and subscribe below. I'll be back with another great trade setup in the next episode.